So everyone's been wringing their hands about unit sales. It sounds like you're focusing more on services revenue. What's your note about?
Well, we're talking about, you may remember back in September, we were talking about TAC, which is the money that Google pays Apple for search that's done on Apple's platform. So we're just updating that this morning because Google's reported again, and we have a couple more quarters since our last report. But people were really, I think, surprised to hear the last time we reported on this back in September that it's about $9 billion we were estimating for TAC in 2018. And in fact, Google's reports support that. We think it was about $9.5 billion of revenue to Apple that Google paid them. So really an interesting number to take a look at within that services line.
So Rod, it's an interesting number, and it looks like, according to this note, you expect that to decrease. What does that mean for Apple?
Well, we think growth's going to decrease. We don't believe the absolute number is going to decrease. We think it'll grow next year, but we believe that the rate that they received for that Morgan back in late 2017 increased quite a bit, and we expect that rate to remain stable as we go into 19. So that means that the overall growth rate in services is dragged down a little bit by TAC. And then there are other things going on in services too that cause that number to decelerate in 2019 in our models. So Apple's got a little bit of work cut out for them in services in 2019.
Yeah. What's a sustainable number for services growth in the next couple of years?
It's hard to say what that number is. I mean, we are estimating 16% in 2019, slowing from about 26% in 18. So, you know, that's the million-dollar question for Apple. What can they do to keep that services growth rate from continuing to decelerate? And of course, a lot of people believe original video content's coming this year, maybe an Apple Prime sort of a service. So those are the kind of things they're going to try to roll out this year to keep that growth rate stable. But right now in our models, it's decelerating.
So while you've been working on this, some of your counterparts on the sell side have been looking at what iPhone units may do this year, particularly given some softness in China. Are you more concerned about the services revenue slowdown or iPhone unit slowdown or decline?
Well, iPhone units is pretty baked in, and we've been below the street for a while, Carl. So we've been estimating that replacement cycle expands to about 4 years in 2019. And I think that other people are coming around to that point of view too. So we expect that the focus in Apple is going to really rotate heavily toward this services line. And within that services line, like I say, this TAC represents about a quarter of the revenue, maybe a third of the profit. So it's a very important line to look at within services, we believe.
Another important line is the App Store. We've got this case in front of the Supreme Court right now arguing whether Apple's App Store is a monopoly or not. How much of a risk is that to the services story here?
Yeah, the App Store is about a quarter of the revenue as well, and it's pretty similar in terms of profit split, so it's about a third of the profits. So the App Store is important. The thing I would say about the App Store that we need to think about is the installed base of Apple iPhones is stabilizing, so it's not growing as much anymore. And then the question is, will people keep downloading more and more apps on their phones and driving growth there? We think that growth rate will probably slow over time. So it's important, but it's not the thing that's going to move the needle against Wall Street expectations.
I was going to say, we spent a good part of this conversation, Rod, talking about areas in which they have to manage deceleration. Do you see anything on the horizon that would be a big offensive move, either new product line, a different strategy on pricing, M&A, and so forth?
Yeah, look, what they've got to do is roll out a new services package or maybe a bundled package that's going to really drive penetration in that installed base up. We think that their installed base penetration today is just over 10%, maybe 12% if you look at iCloud storage and music in terms of how many people have adopted things they really pay Apple for. So they really need some kind of a bundle, some kind of a service package that moves the number up. And you know, we've yet to see them announce anything. We think maybe in late March we'll see something, and then we'll just have to monitor how consumers respond to it.
Okay, so to bring this all home to investors who are tuning in right now, Rod, stock's trading around $170 a share. You think it's going where?
Well, we got a neutral on the stock, so we think it's going nowhere by definition. So that's kind of where we believe Wall Street expectations are adequate. We don't think Apple has a lot of opportunity to outperform those expectations this year, and thus the neutral rating we've got on the stock.